Isn't there like a stat that most people should, I mean, if they're looking at their current CPA and their current situation right now, is there anything that you point to, like what's your overall effective tax rate? Like, is there anything that that people should use to gauge their current relationship with their CPAs, or should it be more looked at as like, how frequently are you talking to them? What's their cadence for meetings? What are you guys going over? What's your opinion on that?
Gosh, it's both. It's both because, say a prospect comes to us and says, oh, my prior accountant saved us 12 grand in taxes last year. He told me to buy a big piece of equipment.
Yeah.
Great. What effective tax rate are you in? Were you in a 12% bracket because you just started up this year, where I would have told you don't spend the money, wait until next year when you get into a 24% bracket, and that deduction is going to yield you so much more savings. So I don't like hey, let's spend money at year end. Let's go and rush and buy some equipment. Great. What's your effective tax rate? It has to be always around effective rate. So knowing where your dollars are spent, because a deduction, as you know, is not a dollar for dollar reduction in tax. Credits,
Right.
sure. Credits are great. We all want credits, but there's only a limited amount that come into play. Timing the deductions, effective tax rates. And then on cadence, we are big believers that if you're not meeting with the client quarterly, something's going to fall through the crack.
Amen.
So in these, I tell them, hey, it could be a 20-minute meeting, it could be an hour meeting. You're going to dictate that conversation on what you have going on. If you tell me, hey, everything's great, I looked at the balance sheet, financials, everything's tracking out. This is just a touch point. This is to ensure that we're still aligned come year end. But quarterly is going to be our cadence. The other thing I think we do a little bit different is we say quarterly just to ensure that there's dedicated time on the calendar, but it's truly unlimited access to me and my team. We don't hourly bill. It's a subscription, all-inclusive model. The more conversation, the text, emails, calls, whatever the client prefers, we want to understand that cadence. We want to, capitalize on.
Yeah, I love that. I think that's so missing right now. Again, your practice, especially for people that are growing and more profitable, and all of a sudden they had three great quarters, and they're like, not really setting aside enough for taxes. You got to adjust. You got to be able to be, nimble, and you may have to pivot and such. So, and I always made a joke. I go, if your CPAs, and again, I'm not a CPA, just so everyone knows, I'm not a tax expert, so to speak, but I've heard enough people that have complained at the end of the year, like, where I knew the advice for most CPAs was, hey, either buy something that you probably don't need, or just try to stash as much money as you can in a retirement fund as your sole tax, deductions or strategy. I go, that's probably kind of lazy tax planning, because there's other things to do. Obviously, retirement funds are used. They're awesome. I mean, you should use them for reduction of taxes, but you just can't rely on just two things every single year. And so that's kind of funny that you said that.